Hello, this is Steve Malone with Compass FX. I hope you're doing well today and you're getting some good trades. In the previous video that I talked about the Aussie dollar and a potential forecast on the Aussie dollar, the market had been split between Aussie dollar bulls and Aussie dollar bears, and there was a split in the reason why the market should go one way or the other. And I mentioned in the video to keep your eye and ear attuned to the news. And if we had favorable news out of China, Australia, or Japan, there would be that potential to see the market move up. Whereas if the news was less than expected, we'd see a move down. And I did mention that if we got a move up, we would see a potential move up to 577. And this is where the market was at back in mid-December, these highs back here. And I said that there was a possibility of moving back to these highs if we have some favorable news. Well, overnight, we got that favorable news. The trade balance for China was much better than expected. And as it appears the Chinese market's recovering, well, that's really spills over to the Australian market and helps push the Australian dollar up. Also, we saw some additional risk on the marketplace as the Asian equity markets closed higher. That also gave a push up on the Aussie dollar. So be aware that sometimes in the marketplace when you see an upward channel in price and a slight downward channel in the Trader's Dynamic Index or your sentiment indicators, just be aware that in this up and down, up and down, up and down, that it sometimes is going to be a news-related type item going to the fundamentals, the economics of the marketplace is going to be the driver. And everybody's kind of sitting on the fence trying to figure out which way we're going to go, but yet they're prepared to go one way or the other. And I just think that with the news we had last night, it was that strong push up that we got based upon the Chinese news. Now, where do we go from here? We take a look at the weekly chart of the Aussie dollar. We have this large pennant pattern or wedge pattern, lower highs, higher lows, and we broke above the top here, and the 21-day EMA had moved from about that 465 level up to about the 485. So the near-term support for the market right now for the Aussie dollar is going to range somewhere between 485 and the 105 level. If we stay above the top of this trend line here, the break of the wedge, then I look for the market to go up to previous highs, which would be the 106.24, the 107.5, and then the 108.55 level. These would be the levels to see the market potentially roll up if the market continues to push higher on the Aussie dollar. Now, there's still things in the marketplace related to the Australian economy that could see it slide back down. If it does slide back down, the longer term support level to be aware of is going to come in at 102, and then you're also going to have a base right in this neighborhood that's going to put us right around that 350 to 375 level. So a break lower would be about that 350, 375, and then possibly a push back down. But as of right now, if the Chinese economy improves, that would be a stimulus to the Australian economy, and we could see a continuation up. Again, some are speculating that we could see the Aussie dollar push back up to highs seen back in 2011. Now, today was also a news-driving day for the euro dollar. As a matter of fact, taking a look at the euro dollar right here, it had a strong move of about 240 pips, right about 235 pips today. A very strong move to the upside based upon the ECB not cutting interest rates as what had been hinted at back in December. Mario Draghi, the ECB president, announced today that it was a unanimous decision amongst the ECB members to keep the interest rate of the euro dollar unchanged. Well, that caused a big exit of euro dollar shorts across the board. So this is more or less unwinding of euro dollar shorts and not necessarily euro dollar longs get in the marketplace, even though intraday momentum had euro dollar longs going in. But institutional longs aren't necessarily in the market yet. This was unwinding of institutional shorts in the market. To exit a short, you've got to go long the market. So we really have to look at the weekly perspective of the euro dollar, because I do think if the strength in the euro dollar continues from a weekly perspective, then we look for the market to push back up to an intraday target of 133 and then target of 133.85 that came in back here back in April of 2012, and then we could push even higher back to February of 2012, back up there at 134.85. Now, taking a look at this, we have a particular chart pattern that would lend itself to a higher move in the euro dollar. We have this point right here. If I take this, set it here, and take it again and set it right here, and come across, we do have an inverse head and shoulders pattern. Now it has a declining neckline, which isn't a very strong signal, but we still have an inverse head and shoulders signal nonetheless. And over the last 2 weeks, the market has held this break here. It came back, couldn't go any lower, and again we tested that low, and now we've pushed off of that. Right now it appears the 21 EMA on the weekly chart is the key level, and that's right at that 129.60 to 130 level. So if that level holds, that's going to be our current near-term support, and we can see this push on up. Be aware that there are offers in the marketplace right now right above 133. We've hit this level. Now this will be the 4th time to hit this level. We could get a pop of 133 just to trigger buy stops above and then see it fall back down. Because, again, this big move up today wasn't really anything to do with a new improvements in the Eurozone. It had more to do with unwinding of positions. So be aware that when the news items come out, there's going to be a balancing act. The underlying tones of the Eurozone really haven't changed that much. But as long as the Federal Reserve here in the U.S. keeps a damper on the dollar, then there's the choice for most investors and institutions to leave the dollar and persist in the euro or the pound or the Aussie dollar on a carried trade basis. Well, folks, this is Dean Malone with Compass FX. Hope some of this information about the Aussie dollar and where it could potentially go to, again, up to the 624, 750, and finally possibly up to 855. And also keep an eye on the euro dollar, the potential chance for the euro dollar to hit 133. If it stabilizes at 133, then we see the push up to 33.85 and then possibly up to 34.85. Y'all make it a great day. Get some good trades. We'll talk to you next time. Bye-bye.